Well, yes, Hindalco's wholly owned subsidiary Novelis has reported weaker than expected set of numbers. In fact, EBITDA for the quarter gone by declined by about 9% on a year-on-year basis. One on account of tariff and second also on account of lower scrap prices in the quarter gone by. So that weighed heavy on numbers. As far as EBITDA per ton is concerned, that came in at about $448 per ton versus $432 that the company had reported in the previous quarter. So slight improvement on a sequential basis. But despite that, on a year-on-year basis, EBITDA per ton has declined and shipments have largely remained flat on a year-on-year basis. Now, as you mentioned, Capex has risen and that is likely to be a big negative for the stock today. Remember, Bay Minette capacity expansion plan is underway. It is likely to be commissioned sometime next fiscal. The Capex earlier was at about $4.1 billion. That has now risen by 22% and the management is guiding for a total Capex of $5 billion for this particular project. The management also says that 50% of this $900 million increase is on account of inflation and the balance is on account of the project related costs given the scale of the capacity expansion plan that the company has. So yes, this is likely to be a major negative for the stock today. Apart from this, as far as the fire incident that took place some time ago, the management said that this is likely to weigh heavy on EBITDA to the tune of 100 to 150 million US dollars and negative free cash flow impact of about say 550 to 650 million dollars, and this is likely in the second half of this year. Meanwhile, Nuvama has come out with a report. They say that they are not expecting any kind of earnings recovery in the second half of this year and perhaps earnings could only recover in FY27. So brokerage houses clearly are not very bullish when it comes to outlook, at least for the remainder of this year. Capex plan cost increase is a major negative and earnings have also been soft this quarter.